Hi everyone, we are now going to review problem 17B in chapter 1. This is on pages 38 and 39 of your book. Remember, you should have tried this on your own and now you're just verifying how well you did on the problem. So we have here Nina Nico launched a new business, Nico's Maintenance Company, that began operations on June 1. The following transactions were completed by the company during that first month. At the top of page 39, they tell us create the following table similar to the one that you've been working with, like in Exhibit 1-9. So we have the date, cash, accounts receivable, and equipment are the primary assets. Liabilities are just accounts payable, and under equity, we have our four common types of items. Capital, withdrawals, remember withdrawals is an overall decrease on our equation. Revenues, and expenses, which expenses decrease our equation. And we always are watching to make sure our equation is in balance. Assets must always equal liabilities plus equity. So what we need to do is look at each transaction, determine what's affected by the transaction, how it's affected, and then record it on our table. Now you could see the answer key right in front of you. So let's take this step by step and explain each one. On June 1st, Nina Nico invested $130,000 cash in the company. So she took $130,000 of her own personal money and put it into the company's checking account. So we are recording the effect on the company here. So the cash asset will increase. So we would put positive $130,000 in the cash column. Why did the company receive cash? Investment from the owner. So we keep track of investments from the owner in the capital column. So we'll increase the capital column $130,000. Assets equal liabilities plus capital. June 2nd, the company rented a furnished office and paid $6,000 cash for June's rent. So we look to see what's affected. Well, cash. Cash decreased because they paid $6,000. So we will decrease the cash column by $6,000. What did they pay for? They paid for a rental service. Rent is an expense to the company. Remember, whenever they have to pay for a service to run their business, like renting an office or a building, it will be recorded in our expense column. And you can see there's the little word rent next to it. So we know that was for rent, and expenses decrease the accounting equation. So that's why you'll see a negative there. It doesn't mean we have negative rent. We're just showing the effect an expense has on the equation. June 4th, the company purchased $2,400 of equipment on credit, or what we say is on account. So they purchased equipment, so they own more equipment, so we increase the asset equipment $2,400. But they purchased it on account. They have not paid for it yet. So they owe that money. So they're going to increase the accounts payable column $2,400 because they owe more of a liability. And our equation is still in balance. June 6th, the company paid $1,150 cash for this month's advertising of the opening of the business. So they paid cash. Cash decreases. So in the cash column, decrease $1,150. What they pay cash for? For advertising services or expense. So we will show that $1,150 in the expense column. The overall effect on the accounting equation is a negative effect. And we'll write next to it that it was for advertising. On the 8th, the company completed maintenance service for a customer and immediately collected $850 cash. So the cash column increases. They received $850 of cash. Why? Because they performed a service for a client, and that's what they charged the client. Remember, whatever a company charges the client for a service is kept track of in the revenue account. So in this case, they got the cash immediately. So we'll see $850 in that revenue column. However, on the 14th, the company completed $7,500 of maintenance services for City Center on credit or on account. That means they didn't receive the cash the day they completed the service. They still have revenue because they completed the service, so they'll increase the revenue column by $7,500. But since they weren't paid for that service, it is owed to them. And remember, we keep track of amounts customers owe the company in the accounts receivable column. So accounts receivable asset will increase $7,500. The 16th, the company paid $800 cash for an assistant's salary for the first half of the month. Well, they paid cash, so definitely cash will decrease. The next question is, what do they pay cash for? For the salary of the assistant. So that's an expense to the company. So they will record that in the expense column, $800. The effect on the equation is decrease because expenses decrease the equation. Whoop. And we'll write next to it that it was for salary. Sorry, okay. Next, the 20th. The company received $7,500 cash payment for the services completed for City Center on June 14th. So if you take a look back up on June 14th, remember the company completed the services, so they recorded the revenue. They said, here's what we charged the customer for this service. But the customer didn't pay it. So they recorded the amount in the accounts receivable column to show that it was owed to them. Well, now the customer is paying for it. All they're doing is receiving the cash. The company isn't completing more services for that customer. So the cash increases definitely because the company received cash from that customer. Accounts receivable decreases because that customer no longer owes that money. They paid it off. So be careful of that. The 21st. The company completed $7,900 of maintenance services for Paula's Beauty Shop on credit again. So they completed a service, and they charged the customer $7,900. So in the revenue column, we'll put $7,900. But again, they didn't receive any cash the day they completed the service. So Paula's Beauty Shop owes the company $7,900. The company will keep track of that in the accounts receivable column. Looks like the same thing happens on the 24th. The company completed $675 of maintenance service for Build It Coupe on credit. Again, they completed a service, show that amount in the revenue column. We want to accumulate all the charges for completing services to customers in the revenues. Again, the customer didn't pay the day we completed the service, so we'll increase the accounts receivable column to show that customer owes it. The company received on the 25th $7,900 cash payment from Paula's Beauty Shop for the work completed on June 21st. Again, the company already recorded this $7,900 as revenue. Now they're just receiving the payment. So they'll decrease accounts receivable for the amount they received from the customer and increase cash. Decrease accounts receivable because if we didn't, it would look like the customer still owed it. They don't. The 26th, the company made payment of $2,400 cash for the equipment purchased up on June 4th. So just to bring us back to June 4th here, let's see if I can get this highlighted. There we go. June 4th, when they bought the equipment, they increased the equipment column to show that they owned more equipment. But they didn't pay for it that day, so they owe the $2,400. Well, now they're paying off that liability. They're paying it down. So they're going to decrease the accounts payable column by the amount of payment they're making and decrease cash. Oops, sorry. Decrease the cash column here because that's how they're paying for it. The 28th. The company paid $800 cash again for that assistant's salary for the second half of the month. So we'll decrease cash, and just like before, we'll show this as an expense, noting it was for salary, showing that it has a negative impact on the equation. The 29th, Nina Nika withdrew $4,000 cash from the company for personal use, and she's allowed to. She's the owner. So we're going to decrease the cash column because the money came out of the company's cash account, and we will show this as a withdrawal. Anytime the owner takes money out of the business, we show it in the withdrawals column, knowing, just like expenses, withdrawals have a negative impact on our equation. The company paid $150 cash for this month's telephone bill. So on the 30th, they'll decrease cash $150. Remember, telephone and any kind of utility is a service the company receives to operate, so that's an expense. So in the expense column, we'll put in another $150, showing that it has an impact, a negative one, on our equation, and then note that it was for telephone. And the final transaction for this month, the company paid $890 cash for this month's utilities. Again, decrease the cash column $890. They paid the cash. What for? The utilities. Utilities are like electricity. Those are services the company has to pay for or buy from somebody else in order to operate their business. So that's an expense. And notice it's utilities. And those have a negative impact on our accounting equation. So when it comes to the cash column or the accounts receivable, the equipment, or accounts payable, assets and liabilities will have increases and decreases in them. So we will have to net those amounts. So we take 130,000 minus the 6,000 minus 1150 plus 850 minus 800 plus 7,500 plus 7,900 minus 2,400 minus 800 minus 4,000 minus 150 minus 890. At the end of all those transactions, the cash balance, $130,060. Do the same with the accounts receivable column. Positive 7,500, negative 7,500. Positive 7,900, positive 675, negative 7,900. So the balance in accounts receivable, $675. And that's true. We have one customer who still owes us $675. The equipment, the only stuff we bought and we still own, costs $2,400. So what we do then is, and you'll hear my calculator in the background here, you're going to take the $130,060 of cash plus the $675 of accounts receivable plus the $2,400 in equipment. So total assets are $133,135. Now go to your liabilities. Well, we have positive $2,400 from the 4th, but then we have negative $2,400. So it ends up our liabilities are zero. We don't owe anybody anything at the end of the month. Now, when it comes to any of those capital columns, remember what I was saying back in our lecture. We focus on accumulating in those columns. We want to know the total amount the owner gave to the business, and that's what we keep track of in capital. There was only one investment by the owner this month, and it was for $130,000. We want to know all the withdrawals the owner took out of the business. Well, they only took one, and it was for $4,000. We want to know all the revenue that the company earned by performing their maintenance service for customers during the month. We'll add those up. They had $850. Oops, sorry, I have my glasses on. There we go. $7,500, $7,900, and $675. So a total of $16,925. And then, although expenses decrease the accounting equation, we want to know the total amount of the expenses. So we have $6,000 plus $1,150 plus $800 plus $800 plus $150 plus $890, $97.90. Now, if we take our accounts payable as zero, plus the investment by the owner of $130,000, subtract the $4,000 of withdrawals, add the $16,925, Hold on one second. I got to see where my corrections are. Sorry. Try it again. I lost my buttons here. Hold on. 130,000, 4,000 subtracted. Then we have 16,925 of revenue added. And expenses decrease the equation, so subtract them. Liabilities plus equity, 133, 135. And that's what we're focused on here. Afterwards, do assets equal liabilities plus equity? If they do, we could go to the next step. So this is our first major hurdle. Understanding what an asset, liability, and the different parts of equity are. Understanding how to read a transaction. Figuring out, analyzing what was affected by that transaction, how it was affected, and then recording it. And you must know how to do this by your time you're leaving chapter 1. Now, once you have the amount, and they give you some check figures there, I think you have them in your book. Now we can go down and create the reports. And we're only going to do step 2. I told you to skip the statement of cash flow. So we're going to prepare the income statement, the statement of owner's equity, and the balance sheet for the month of June. Taking the information from this table. Remember, what goes on in income statement, which is our first financial statement? Revenues and expenses. So we're only focused on these 2 columns when we are completing our income statement. So let's take a look. Remember, you always start with a heading, name of the company, name of the financial statement, and the date line, which in income statement, we are reporting revenues and expenses, not just for one day, but for a period of time. In this case, for month ended June 30th. And that's always how it's going to be. If you just put June 30th there, it would look like everything happened on June 30th. No, it didn't. It happened throughout the month. So we're going to start with revenues. So our maintenance service revenue, that's what we call our revenue, is $16,925. We only have one source of revenue in this company from completing maintenance services. Now, when it comes to our expenses, we have a few different ones. So we've got to take our time and be careful, but we want to list each one with the dollar amount. And if there's any that are common, like the salary, add those 2 together to have $1 amount. Take a look. Rent expense, $6,000. Salaries expense, $1,600. Advertising expense, $1,150. Utilities expense, $890. Telephone expense, $150. So again, that's all being taken out of this column. It doesn't matter what order expenses are in, just as long as they're all listed. There's no abbreviating being done. And you make it look nice. We are using a 2-column. We have numbers in 2 separate columns on this income statement. If we only had one expense, we could have had just 1 column. But since we have more than one expense, we list each expense separately in the inner column and just put the total expenses underneath the total revenues. Remember, you do not have to put brackets around expenses. If you did, it would look like you have a negative expense. Decision makers know that expenses decrease and revenues increase. So we automatically subtract the expenses from the total revenue. And if the result is positive, like it is here, $7,135, it's net income, double underline. So this company's profit, net income for the month of June from providing services and paying those services to run their business every day, $7,135. So that's one statement using some of the information from our sheet. The next statement, remember, is the statement of owner's equity. Again, you're starting with the name of the company, the name of the financial statement, and the period of time we're reporting for. So this statement shows how owner's equity or capital changed over a period of time. In this case, for the month ended June 30th. So we always start with a beginning. Where did we start the month at? What was Nico's capital balance as of June 1st? Well, it was 0. They just started the business on June 1st. During the month of June, She made an investment of $130,000. Where do we get that from? This column right here. What other items affect equity? Well, here's revenues and expenses. But we already provided that detail over here on the income statement. So just take the net of those two amounts, which is, excuse me, an increase to equity because revenues were greater than expenses, and just bring it down and add it on to the statement of owner's equity. So we usually handle increases to equity during the month first. Any item that decreased equity, which is normally either going to be withdrawals or if they had a net loss in the company, are subtracted. And you see there it says less withdrawals by owner. We subtract that. So what is the equity at the end of June? $133,135. Double underline. So we're showing, it's kind of like a savings account statement or a checking account statement for the owner from the business. Hey, here's where you started the month at. You didn't give us any money yet, but then you gave us some money. We made some money for you, and you took some money out. So here's how much the company owes you as of the end of the month. And that's the way you could look at this statement of owner's equity. The final financial statement you're responsible for in this chapter is the balance sheet. And that's where we report the amount of assets, liabilities, and equity as of a specific date, which is always the last day we're reporting for, June 30th. So you see there's the company name, the name of the financial statement, and June 30th. We'll start with the assets on the left. All we do is go back up and say, okay, we have three assets, cash, accounts receivable, and equipment, and each one has a balance at June 30th. So we're transferring the name of the asset and the respective balance to the balance sheet. So this is all transferred right in here. We'll add up the three amounts, double underline them, and label them total assets. You must label everything and no abbreviating. On the other side, this is not normal for a company. They usually have liabilities. And so we don't get used to not putting liabilities. First, we list any liabilities. Since accounts payable has a zero balance, we'll just write accounts payable and zero. But normally, like I said, it's going to have some type of a balance. Then we list equity. Now, notice there's just $1 amount here. Yes, because you already determined the final balance in equity on June 30th on the statement of owner's equity. So you just carry what you already figured out down to the balance sheet. So NICO capital, June 30th is $133,135. Liabilities plus equity, $133,135, and you label them as such, double underline. Assets equal liabilities and equity. So that's the mechanics of creating these reports. And this is what we're here for. In financial accounting, we're here to create financial statements. And we'll be adding to these as we go through the semester. But for now, you want to focus on analyzing those transactions, back up here, figuring out what was affected, how it was affected, and recording it on the spreadsheet, making sure when you're done recording all your transactions, assets equal liabilities plus equity, and then creating the three financial statements. Okay, so please keep reviewing this and ask any questions you may have on the discussion board.